Hello everyone, myself Vaibhav. In today's session of Market Movers, we will be taking a look on the USDJPY, which is a turnaround story in last two sessions, and now it looks like that the bulls are back and we are likely to see the bullish revival happening in the USDJPY, and it might propel it to the higher side, and even the levels of 106 are inside if we consider it from the medium term perspective. So we will be looking at the data as well as the technical developments which are likely to be helpful in the bullish revival of the USD JPY. So let's get started for the day. If you consider the data docket for the day, we don't really have much data coming in for the Asian trading session as well as for the European trading session. So for the major releases, we turn to the North American trading session, in which we have a lot of data points coming in, starting from the initial jobless claims for the week ended 21st of November. And here, as expected, the figures are likely to stay above the 700K mark, and this will be in continuation of the trend for last couple of weeks. And at the same time, we will be getting the second estimate for the GDP for the third quarter of 2020, and along with that we are also going to get the durable goods orders data. So we are not really going into the fine print of this, considering that fact that GDP release for today is the second estimate, and we are not really expecting any big revision in the prior figures. Later in the day, we are also scheduled to get the Michigan Consumer Survey data, and here I think most of the parameters are likely to be on the lower side compared to the prior release. If we consider the current conditions, the estimated release for today's is on the lower side, and we might see the reading around 85. The inflation expectations might remain as per the prior release, and not much change is being expected. And the consumer sentiments are likely to go down, considering the rise in COVID cases in United States, and as a result of that, the economic activity has taken a hit. We are also scheduled to get the PCE price index data, which is the favorite gauge of the inflation for the Federal Reserve. And here, if you consider the reading at month-on-month terms, I am not really expecting any big growth, and rather than that, the inflation might remain flat at 0% in terms of month-on-month. But for year-on-year, there will be increase, and it will be lower than the prior month's reading, but still 1.4 is respectable enough. And for commodity traders, we also have the crude oil inventory data coming here up for the WTI crude oil, and here the consensus is that we might see the rise in crude oil inventory by around not much, barely positive, but around 0.2 million barrels. And considering the fact that the crude oil prices are on the tear, considering the positive sentiments in the market after the positive news flow has started to come in on the vaccine front. I'm not really expecting any big corrective move happening in the light crude oil prices anytime soon. Now let's turn our attention to the technical aspects, in which we will consider the USD JPY first, and then we will also see what's happening in the Euro USD. Let's get started with the USD JPY's technical outlook first. This is the daily time frame chart, and not much has changed from yesterday's session. Yesterday's session also, the chart was pretty much looking similar. The only thing is that the gains which we had seen in the prior sessions are pretty much still there, and USD JPY is consolidating on the higher side around 104.5, and as a result of that, I think the near term tendency is to be on the bullish side, and we might see it getting closer to the resistance zone in around 105, and if things go well, we might even see it rising to the prior swing high, which is there around 105.5. But for today's session, we will be considering the short term perspective, and for that, the lower time frame charts like 4 hourly and hourly will be more helpful. If you consider the price action so far this week, then you can see that the gains are pretty much there, and considering the consolidation on the higher side, I am expecting the USDJPY to rise to this central pivot point of this month's pivot point series, and as a result of that, we can expect the 105 levels in by the end of this week, if not earlier, and we can try to see if we can figure out the opportune time to get involved, which will cut down on our possible losses and increase the rewards if we happen to be right. If you consider the regression curve, it has flattened and now slowly it is bending upwards. That's a good sign for us, as it is showing that the turnaround which we are expecting has a greater chance after this prolonged consolidation and the formation of higher high. And keeping that in mind, we will be trying to see if there are points in today's session, the price points we can target. So if we want to get involved for the fresh trade in today's session, I think we will have to be pretty much mindful of yesterday's low. The yesterday's swing low was established just barely above 104. It was around 104.10, and that's the marker I think we can use for today's session as well. Right now we are like 40 to 50 pips away from that desired zone, and it's not really sure that we will be getting the entry point closer to that price point, but that's the marker, and I feel we should try in today's session. If we can get the entry anywhere closer to this zone, I think we will have to go with the price band of around 104.2 to 104.3, and if we are fortunate enough, we can get the entry there, and that is going to help us in cutting the stop loss levels. We will not really need to keep a big stop loss if we get the entry around that point, and the risk reward ratio will also be in our favor. So here in today's session, I think this SMA cross, the 50 SMA crossing above 200 SMA, is also confirming our bullish case, and that's the crucial area also for the entry point. And on the lower side, the stop loss can be kept below this 100 SMA, which is there around 104.07. So I think for today's session, the price level around 103.90 should be good enough, and if we are going to get the entry anywhere around this support zone, then on the higher side, the price target can be kept closer to 105, as I said, and the risk reward ratio would be good enough for us to go ahead with this trade. Now, moving on to the Euro USD's technical outlook. This is the daily time frame chart, and after this correction towards 1.18, we are seeing renewed buying momentum in the Euro USD, and it is poised for the further break on the higher side, and this crucial level of 1.2 is pretty much in sight. So we'll be looking at this consolidation phase, and we will be trying to see if we can figure out the pretty much optimum risk reward ratio here. And in today's session, the price zone around 1.185 is the target point for our entry in the Euro USD. So let's see what's happening in the lower time frame. We have this regression curve pointing north, and on the lower side we also have this first resistance zone, which was broken earlier in the week, and now we have it acting as the support. So looking at that, I feel the entry in Euro USD for the bullish trade is going to be helpful, but the upward momentum which we have already seen in yesterday's session is making our job difficult, and as a result of that, we will have to be a bit more patient in the Euro USD, and if we can wait it out and wait for further correction happening in the Euro USD, maybe 30-40 points lower from the current valuation, then that will be more appropriate. But considering the strong buying which is happening in the Euro USD, that's going to be a tough ask, and as a result of that, as I said, the job is going to be much tougher for the Euro USD trade in today's session. So let's see what's the 1 hourly chart is telling us. We have this confluence zone of 50, 100 and 200 SMAs around 1.185, and right now the price is around prior swing high. It has also crossed above it, so we have further bullish confirmation for the today's session. But as I said, we need some correction from the current levels, as if we go for the market entry, we will be taking a lot of risk. The stop loss is going to be a lot wider, and as a result of that, the risk reward ratio is not going to be that favorable. And even if the probability is there for the Euro USD to rise towards 1.2, I feel it will be better for us to wait it out, and maybe if by later hours of today's session, if we see some sort of correction and then consolidation, and if we get the entry point anywhere closer to this confluence zone of three crucial SMAs, then that will be a lot better for us to go for the fresh trade, fresh long side trade in the Euro USD, and we can keep the stop losses anywhere closer to 1.183 or just little below that. And on the higher side, as I said, I am targeting the price zone closer to the 1.2, so stop target can be kept anywhere below that, and the risk reward ratio is going to be in the ballpark of 1:2, so that's going to be good enough. So that's it from my side for today's session, and before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and also one should be careful while using the information provided. Have a fabulous trading session ahead. Goodbye.